Hi there, welcome to Kneppy Invests. Something a little bit different right now because I am using Zoom for the very first time. I actually discovered Zoom yesterday. Now that's not completely true because I've known about Zoom for over 3 years, but I didn't realize until yesterday that I can use Zoom to record these videos. I thought I'd have to pay for it, and I thought I'd have to pay something like $300. But no, I actually can use Zoom for free to record these videos. And some of the things I can do with Zoom are vastly superior to what I've been doing in the past, including what I'm doing right now, which is using Zoom virtual background for my PowerPoint presentation. So if you like what I'm doing in today's video, please leave your comments in the comment section. And if you don't like it, maybe also leave some comments. I'd like to have a little bit of feedback in regards to this particular video, and if this is really weird what I'm doing now. Also audio, I have a feeling audio is going to be better using Zoom as well. Now, I was going to do a state of the market video, but I have not finished the preparation for that. And I have found some interesting things. When you look at the 10-year US government yields and compare it to the state of the market and the economy, there are some interesting things there. So I want to explore that a little bit more later in today. So I'll do that video tomorrow. Now, today's video, 6-month high, is in reference to companies whose share price is at a 6-month high. And the reason I'm looking at this is because in yesterday's video, I was talking about stocks breaking out. And one of the criteria I have discovered in regard to that, and when I say one of the things I discovered is increasing success for a stock breaking out, is if that stock breaking out is at least a 6-month high. If it's at a 6-month high or longer, there is a greater chance that the stock breaking out will be a successful breakout. I have seen occasions in the past where the breakout has happened when the stock price is at like a 2-month high and they have failed. So what I've decided, and this is something I just found out yesterday, is instead of looking at stocks breaking out, let's focus on stocks that are at a 6-month high and then work my way backwards from there. And just the companies I'll be featuring in this video really highlight this fact, because quite a these companies I'll be featuring in today's video actually show signs of breaking out, even though the share price is in an uptrend and the share price is at least a 6-month high. I think for some of these companies, the share price is in at an all-time high. Quite a few of these companies I have not looked at in the past in one of my videos. And that's the other exciting thing about this video is we'll be featuring companies I don't even know what they do. So let's get stuck into it. And actually, the first stock I'm going to be looking at is actually an ETF. And that ETF is food, which I didn't know existed until about 3 days ago when a guy called Claude Walker actually mentioned food, this ETF, in a podcast. And really, there is a lot of positive sentiment behind this sector, food. The majority of these companies I do think are international companies. So this is Betashares global agricultural companies, currency hedged. So ASX food, which is simple enough to remember. And if you just have a look at this daily chart, which goes back to August 2021, the price of this ETF is in a well-defined uptrend and at least a 6-month high, because there's a lot of positive sentiment behind agricultural companies right now, except maybe Costa Group. Costa Group, the fruit and veggie Australian company, their share price is not in an uptrend. So maybe keep an eye on Costa Group, because maybe Costa Group right now is undervalued. So right now, positive things for food. Probably what I'd be waiting for here is a little bit of pullback, like we've seen 3 times since December. And each time we see the share or the price of this ETF pullback, that might be a time to take a position in this ETF if you're interested in this particular thematic. Now onto 5 companies that are at a 6-month high, at least a 6-month high. Some of these companies might be at a 1-year high, 2-year high, 5-year high, or maybe even all-time high. And I think Meta Group, the first company in this list, is at an all-time high right now. Now, all these charts are up to the end of closing of trading on the 18th of March. So this does not include trading on the 21st of March, even though I have released this video on that day, because I am recording this video just around time the markets have opened. Anyway, a nice looking chart for Meta Group. Now, I have not done any research on this company. So a lot of these companies, as I mentioned before, a lot of these companies I have not looked at in the past. So this is all based off technical analysis. What I would like to do is then, once I've seen these companies at a 6-month high, share price breaking out, and in actual fact, Meta Group has broken out from a potential resistance level at $2.60. My next step would actually have a look at the company, or a closer look at the company, to see if they are financially viable, that sort of thing. But you don't have to do that. You can just trade the price and volume movement. Now, with Meta Group, we have seen share price move past the resistance level at $2.60. So share price of Meta Group is at an all-time high. Why am I interested of share prices or companies with share prices at all-time high, or at least a 6-month high? It's all about resistance. And right now with Meta Group, there is not one single shareholder, if the price is at an all-time high, that is underwater. All shareholders are in the green. And there's no shareholders who think this company is a dog stock and they want to sell out because the share price has decreased from when they bought in. A lot of psychology is at play here. Now, initially, when I heard this thing about people want to sell out when the share price falls, I thought that was a bunch of buoy, bunch of stupidity. But I saw two of my colleagues who, on separate occasions, mentioned they had bought into companies, share price had decreased, and as soon as share price gets back up to where they bought in, they're going to sell straight away. So I understand this psychology, this sort of psychology is out there, where people who buy into companies and see the share price fall automatically think that company is a dog stock and they have to sell out, and they're just waiting for the share price to go up to when they bought in. So that sort of problem does not happen, or is not happening with Meta Group, because the share price right now is an all-time high. It could be overvalued, and that's why I probably would like to look at the financial state of the company. But a lot of positive sentiment behind this company. The share price is in a nice uptrend, and the share price has just broken out from a resistance level at $2.60. Now, onto a couple of resource companies, in fact, maybe 3 resource companies, if I remember correctly. And funnily enough, 2 of these resource companies, which are going to be back-to-back, have very similar names. The first one is Silverlake Resources. I'm pretty sure this is a gold company. And so it's no surprise that we have seen this company's share price break out on pretty good volume as well. And the other really interesting thing about a few of these companies is the massive volume we have seen on the Friday, the 18th of March. So a really good volume here for Silverlake Resources, and the share price has broken out. In fact, it broke out about 2 weeks ago at $1.90. And back in November last year, and then again in January this year, the share price rallied to about $1.85, $1.90, and then fell away. And then in late February, early March, the share price moved above that resistance level, and the share price has kept on increasing. So Silverlake Resources share price and even the financial performance of the company is highly correlated to gold prices. Now, I will look at gold prices in my State of the Markets video that I will release tomorrow. But at this point in time, it is looking fairly bullish for gold and gold companies. And Silverlake Resources is one of those companies. Next company I'm looking at is Lake Resources. So previous company was Silverlake Resources. I'm not sure if Silverlake mines any silver, but Lake Resources is a lithium explorer. I don't think they are a producing company yet, but the market is excited about Lake Resources, and that excitement has intensified over the past month with the share price increasing from 82 cents to $1.55. The other really exciting thing about Lake Resources share price action has been the volume associated with that increase in share prices. So we've actually seen increasing volume over that period. And that is probably the most exciting thing about what we're seeing with Lake Resources share price right now. So share price is at at least a 6-month high, possibly even longer, possibly even an all-time high. So nice looking chart for Lake Resources. The other interesting thing about Lake Resources, and we saw the same thing with Silverlake, and we'll see the same thing with Core Lithium, which is the next company I'll be featuring, is a really large volume we saw on the last day of the trading week, which was 18th of March. That could be a sign of a few things. And what I'd like to see moving forward is increasing volume from here. Wouldn't mind to see decreasing volume, but overall a general increase of volume over the next few months. And that would tell me there's a lot of strength behind this movement in Lake Resources, Silver Lake Resources, and Core Lithium. The other thing this could be is the top, or the short-term top, in Lake Resources, Silver Lake, and Core Lithium because of the increasing in volume. And it wouldn't surprise me to see a bit of a pullback in the share prices of all three companies because of this increased volume. There could be some other reasons as well. I just found it interesting that all three companies had massive volume on the last trading day of the week. Now, onto Core Lithium, I've already mentioned, this is the next company. This is one of the most popular retail companies apparently on the ASX right now. In fact, it's the most traded company on Self-Wealth, the most traded company on Superhero. So there's a lot of interest in Core Lithium. Maybe it's just because it's got the word lithium in the company. I know nothing about Core Lithium. I think their ticker code is CXO. I am wary about lithium companies because there are so many lithium companies coming onto the market. So many lithium companies would be going to production. So there is concerns that in a few years, there's going to be an oversupply of lithium. And this is natural in commodities. Whenever companies and the world thinks there's going to be significant increase in demand of a commodity, you're going to see more companies come into the field, into the sector. And because we're going to see more companies pulling lithium out of the ground, we might see an oversupply. And when we get an oversupply in a commodity, that's when the price of the company drops off a cliff. We saw that with oil. We've seen that with oil a lot. We see that a lot with a lot of other commodities as well. It's all about supply, demand. It's cyclical. All commodities are cyclical, and lithium is no different. So that's one thing you have to be wary about. There's, without doubt, we're going to see the world need more lithium in the future. That does not mean lithium prices will stay high forever. I think we will see lithium prices come under pressure eventually. I'm not sure where that'll be in 1 year, 2 years, 5 years. It could be in 10 years. Anyway, the market, in particular, retail investors are really interested in Core Lithium, one of the most traded companies on the ASX, if not the most traded company on the ASX. And the retail investors have been right because the share price of Core Lithium is in an uptrend. Share price is at least a 6-month high, potentially an all-time high. And over the past few months, in fact, since the start of 2022, we have seen increasing volume. That's exactly what you want to see, telling us the market is getting more excited about the company. And unlike some of these other companies, in particular with Lake Resources, the share price, even though it has been increasing, we haven't seen an exponential rise in the share price. We did see it in January of this year, where the share price went from about 50 cents to about 95 cents, but then it pulled back, a very healthy pullback on actually decreasing volume. And as soon as the share price got towards the 50-day moving average, that was the time to buy Core Lithium. So whenever the share price gets in between the 50-day and 100-day moving average, nice little support level there, that's the time to buy Core Lithium. So a nice looking chart, nice looking price action, nice increasing volume, nothing really negative to say about the technical state of Core Lithium. Now, the overall picture of the company itself, I have no idea. I have not done one iota or bit of research on this company. But again, you don't have to know anything about a company to trade that company. You could just trade the price and volume action. Final company in today's video is Jervois Mining. Now, have I pronounced that name right? I have no idea. This is the first time I've looked at this company, but I do know Jervois is a nickel, copper, cobalt mining company. I'm not sure if they are a mining company or just an explorer, but a lot of tailwinds behind this company in regards to nickel and copper, particularly those two. I do think there is lots of tailwinds behind those two commodities over the next 5 years. Everyone seems to be focusing on lithium when it comes to EV, but nickel and copper are really important in that thematic as well. And because mining companies, people are not as excited about those two commodities, I think there is more potential that the supply won't increase at a greater rate than the demand, which will pull up those prices over the next 5 to 10 years. The other thing we have to take into account when we're talking about mining, and this is something not a lot of people talk about, is over the last 10 years, there's been not a lot of spending by mining companies. In fact, a lot of the biggest mining companies have given all their cash flow back to their shareholders in terms of dividends. So they're not spending money on exploring development of new mines. And there is potential we might see a dearth of supply in a lot of commodities over the next 10 years because of this lack of spending by the big mining companies. So there is that potential of a super cycle in mining just because of the lack of spending by mining companies. I haven't really heard that talked about a lot. I have heard it a couple of times mentioned, but I do think that that sort of theme is potentially at play over the next decade. So that's why, or another reason why I'm interested in mining companies, because of that potential. So if you do know about Jervois Mining, I'd love to hear your thoughts on this company. But right now, the share price is at least a 6-month high. Nice share price action over the past 6 months, nice uptrend, nice positive sentiment behind this company. And just like the other 3 companies I've just mentioned, Core Lithium, Lake Resources, Silver Lake Resources, Jervois also saw a massive spike in volume on the last trading day of the week. There must be some reason behind that, and I just haven't delved into that reason just yet. So if you do know a reason why we saw massive volume in those 4 companies on the last trading day of the week, just leave in the comment section of this video. I'm sure there's really some logical explanation behind it. That's all I have for this video on companies whose share price is at a 6-month high, or at least a 6 months high. Some of these companies are at 1-year high, 2-year high, 5-year high, or even an all-time high. And I do like those companies that are all-time high. A lot of investors hate those sort of things because they think the share price valuation probably too lofty. But there are some psychological reasons about why you might consider buying companies whose share price is at an all-time high. I'd love to hear your opinion on this video. I'd love to hear your opinion on Zoom, whether this worked or not, whether the audio is good, whether me having this virtual background, you can just see there are some flaws to it. You just see there, flaws to it, particularly if I wave my hands around. And I am quite expressive with my hands at times. So if you don't like that, I can transition to what I've been doing in the past, but not using what I've been doing, but using Zoom. I do think I'm going to stay with Zoom right now just because it is free and it is a little bit better has better functionality than what I've been using in the past. So I'd love your feedback. So just leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. And tomorrow I'll be doing a state of the markets video. So look forward to that. I'll look out for that tomorrow on the 22nd of March. Have a good day. Talk to you later. Bye.